This is Your Stocks, coming to you live from the nation's IT capital, Bengaluru.
Hello and welcome, and thank you for joining us on Your Stocks. I'm Surabhi Upadhyay. With me is Nigel D'Souza. What a day it's turning out to be for our markets. We're looking at a rally that's above 1% now, almost 1.3% higher on the index. The Nifty very comfortable above 8,600, and guess what? India is outperforming by a wide margin. Most of the Asian benchmarks have ended negative. All of the core European markets are trading down as well. In fact, some of them are down between 0.5% to as much as 1%. The Japanese markets in Asia were down about 1% as well today. So against that global backdrop, what we've got going on the screens is a pretty comfortable rally led largely by blue chip counters. Some big moves there on stocks like Asian Paints, HUL, and even Reliance Industries. Hi, Nigel.
Hi, so as you said, in fact, we're doing very well. Just take a look at the Nifty. It's flying away. I think the Bank Nifty, that's the big one of the year. Yesterday took a knock of around 300 points. Today, in fact, it's bounced back up. Just pull up a few banking stocks. Something like an IndusInd Bank should come up for you. That one, in fact, has moved very, very well in the last few minutes. You pull up ICICI Bank as well. That's the big boy there. It's holding with a gain, I think, of around 1% approximately. So that stock is doing quite well. And SBI as well as PNB, both of them, in fact, have moved to the high point of the day. So the banking stocks, they're doing fantastic. But just take a look at a few other stocks. So it'll be Sun Pharma. Yesterday, people are saying it's down and now. Take a look at what it's done today. It's higher by close to around 3.5%. Kane India as well in early morning trade. It was struggling. It was down 3.5% to around 4%. Currently, it's trading in the green. Big recovery being seen on that stock as well. And if you look at it, Mahindra & Mahindra as well has recovered. So it's looking quite good. ACC and Ambuja as well doing fairly well in the last few minutes. So clearly, it's all those Nifty stocks that are seeing big buying.
Yeah, yesterday's fall has become distant memory already in a matter of 24 hours. All right, let's introduce our guests on the show today. Joining us, Mayuresh Joshi of Angel Broking to answer all your stock queries, and Harshvardhan Rungta of Rungta Securities joining in to answer all the personal finance questions that we'll get on the show today. All right, on that note, let's straight away go across to Sumera Abdi, who's standing by in Bengaluru. It is our Inside Bengaluru special, which is a series that we're running this week. And Sumera is now getting us a few investors right from the ground there in the Garden City. Sumera?
Thanks so much for that, guys, and a big hello from Bengaluru yet again. We're here on the streets of Bengaluru, and we've caught up with two investors who have a lot of questions. So let me get cracking right away. We have Mrs. Pandey, who's actually a very, very keen investor. How many stocks do you hold in your portfolio?
I have so many stock that I have question about 3 stock.
Okay, but before we get to your stock queries, tell me how long have you actually been invested and how long have you lived in Bangalore?
More than 10 years.
Okay.
I am interested in invested in share market, and I am staying here Bangalore about 3 years.
Okay, and we also have with us Keshav, who's another avid investor. Keshav, how long have you been invested and how long have you lived in Bangalore?
I born and brought up in Bangalore, and I have invested from 2008. So it's going pretty well as of now. So I have a few questions on that.
Alright, so as you can see, both our investors have been caught by the investment bug quite early on. They've been invested for easily 10 years or more. So let's get started and actually answer some of their queries. Mrs. Pandey, what's the first stock you want to talk about?
I bought a share of Mastec at the rate of 400, and 50 has been sold at the rate of 450, and I have only 50 share about Mastec. So what we can do? Yeah.
Alright, so the question then is whether to hold on to an investment in Mastec or exit. What's the advice?
All right, Mayuresh, you heard that particular query. Could you advise our investor from Bengaluru?
Afternoon, Nigel. I think clearly out of the business lines that Mastec operates out of, the demerger of his insurance arm, Majesco, clearly contributed a big chunk, 48% to be precise, of the top line. The other businesses that Mastec runs, the UK business and the BFSI business, I think they also contribute meaningfully. But clearly, I think the insurance arm demerger is going to create value unlock, because the kind of IT spends that one really expects from the insurance vertical to come through, and specifically from its North American clients, that can have have significant market share going forward and even a margin expansion. So again, clearly I think though she's sitting on losses at the current point of time, if her time horizon is more than a couple of years, the advice would be to hold on to the stock. So at this point of time, I think our preference lies with the large cap IT names. So names like Infosys, which have delivered exceedingly well on their numbers, HCL Tech, TCS, I think they remain our preferred picks. But clearly I think the horizon for the investor has to get elongated to more than a couple of years.
All right, that's the question on Mastec. Sumera, what's next coming our way?
Alright, so with that, let's get to our next query then, and let me hand it to Keshav. Keshav, what do you want to talk about?
I want to talk about on Tech Mahindra. I bought 500 shares of Tech Mahindra at 545 levels after seeing so much of correction from 700 levels in fact. But unfortunately, the next day when I bought, due to the profit warning, it came down drastically to 460 levels. But I see some bounce back is happening recently. But I wanted to know whether to hold it or to book the profit or book the loss or to focus on other things. Because right now I'm in loss if you see. But my question is whether to hold on to it or whether to take a loss and to focus on others.
Alright, so fair enough, and clearly we're in the IT capital of India because most of our queries are on IT stocks. But what's the advice on Tech Mahindra?
Well, let's ask Mayuresh. Mayuresh, questions coming in from the IT capital. Well, Infosys came out in flying colors yesterday, but what does that mean for other companies like Tech Mahindra, which have sounded far more cautious for the quarter?
Afternoon, Subi. Yes, I think the profit warning that Tech Mahindra has sounded off, I think clearly was an indication of a weaker quarter to come by. So I think Q1, Q2 expected to remain soft because the profit warning primarily comes on account of weaker earnings expected of their organic communication businesses, which contributes roughly 52% of their top line. Now, if you look at the enterprise part of the business, the enterprise part has been doing fairly reasonably okay for Tech Mahindra, and that is expected to grow organically quite reasonably well over the next few quarters. So there are a few headwinds, tailwinds that the company is obviously facing. Headwinds in the form of higher visa costs and clearly the kind of profit warning expected from the telecom business. Tailwinds in terms of a stable currency coming through and expectations of improvement in utilization rates. So clearly I think based on the profit warning, we also have cut down our numbers both in terms of top line and the profitability for the company by 5 and 6% respectively. However, our take is that from third quarter FY16 onwards, better numbers will start getting reflected. Cost optimization efforts, as the management indicated, are already on, and the operating leverage benefits should start kicking in. So my take is that keep an horizon of more than a year. Valuations at this point of time also extremely attractive at around 13.7 times FY17, and clearly I think keep patience onto that stock. The next couple of quarters are going to be soft and weak, but clearly with a year or a 15-month time horizon, we're still maintaining a target price of 646.
All right, Mayuresh, that point's well taken. Then valuation's not looking too bad at around the 13-14 times. And importantly, if you just take a look at what the stock has done from earlier this month, the stock in fact is higher by close to around 12%. So watch out for that stock. You pull up a shorter time horizon, you'll see that stock in fact from July 6th, if I'm not mistaken, the stock in fact has rebounded from around that 450 level. But Sumera, let's get back to you. What's the next query?
Alright, let's shift focus finally to the banking space then, because Keshav has a query on Canara Bank. How many shares do you have?
I have 200 shares of Canara Bank. I bought it at 315 rupees. But I see some of the messages on the board saying we should hold on, we should not buying on the public sector banks. But still, I've already invested at 315 levels. It is not crossing the 300 levels at any cost. So my question is again to hold on to it, or if I want to hold on to it, for how much time it will take to come back to my, like at least to give a decent returns on that.
Alright, so should I remain invested in Canara Bank? If so, for how long? And what are the levels that can be seen on this stock?
All right, Mayuresh, that's another query coming in. Now on a banking stock, what's your take?
So clearly, Nigel, I think our preference stays with the private space. But if you talk about Canara Bank specifically, it has seen deterioration in its asset quality. The gross net asset ratio deteriorated to 2.7% in the quarter gone by from 2.5%. What really hampers a lot of these mid-cap PSU banks' progress is the lower capital adequacy that these guys maintain. So Canara Bank with a CET1 of 7.2%, a lower CASA ratio, it does not help in balance sheet expansion. So I think the NIMs stay within that range of 2.2%. And clearly, I think for return ratios to improve, more money needs to get pumped in so that the balance sheet expansion happens. So the government has promised some money to get infused into a few of these banks, but clearly I think a lot more needs to be done. And again, the asset quality needs to get stabilized, which I don't think so will happen at least for the next couple of quarters. At least for the next couple of quarters, the asset numbers specifically both on the gross and the net side are going to remain soft. And though valuations remain extremely compelling for public sector banks, I think it's going to take some time. So again, I think the advice to Keshav would be he needs to have a time horizon of at least 15 months. A couple of quarters again similar to what we discussed for Tech Mahindra, I think are going to be weak for a lot of these PSU banking lot. And clearly I think for valuations to improve, I think will take some time. So though valuations are depressed, I think he needs to have patience. So hold on to the stock, but keep a time horizon of more than 15 months. He'll be able to recover his cost price.
Okay, so patience will pay off in Canara Bank. That's Mayuresh's take. Samira, what's the next question?
Alright, thanks for that advice. And finally, the last word once again to Mrs. Pandey. What stock do you want to talk about?
100 Voltas bought at a rate of 224. It can be held for 6 months. If it is advisable, then I can hold for 20 to 25% profit. Otherwise, should I exit from it and invest in other stock?
Alright, so the advice that's being sought is on Voltas. Should she remain invested? Should she exit? And if she exits, what are the opportunities that she can look at?
Okay, well, that's a nice profit that the lady is making on Voltas. Mayuresh, stock's just about, what, 15% off from its 52-week high. Should she remain invested?
So clearly I think so will be the two business lines that Voltas operates out of, the EMP business and the unitary cooling solutions. EMP has been a big drag on Voltas revenues. Excuse me. But clearly I think going forward with an improvement in the order book, I think the EMP business.
All right,
Okay,
Mayuresh, we'll come back to you. Just take a bit of a break and maybe sip some water. But getting back to our markets, we're doing quite well. The Nifty is still holding with a gain of around 100 points approximately. So let's slip into a short break. On the other side, we'll focus on some earnings. We'll have Ajay Bijli, the CMD of PVR, who will join us. Welcome back. It's earnings seasons, and in fact, let's focus on one of the stocks that are doing quite well in today's trading session. We're talking about PVR. We have Mr. Ajay Bijli, the CMD, who joins us currently. Hi, Ajay. Thanks so much for joining in today. First of all, congratulations on a fantastic performance. Top line has ballooned up. 30% plus. Could you give us? Yep. Could you give us some details? Your occupancy, your average ticket price, spending per head.
Well, it's been a fabulous quarter. Most of the movies that got released, they weren't even such blockbuster films. You had movies like Tannu Veds Manu, you had Piku, we had ABCD 2. So if you look at the lineup of movies, they weren't blockbusters, but yet there was a momentum of people coming in and watching movies. Even Hollywood films like Fast and the Furious, Avengers 2, and also another Hindi film, Dil Dhadakne Do. So they were all average films, but they all performed very well. The ATP, the average ticket price went up by 4%. Our overall occupancy, which was 32% last year, has gone up to 38%, up by 6%. But on a consolidated basis, if you look at it, we're very happy with our EBITDA. We were at about 55 crores last year. We had 113 crores this year. Our margin has improved to about 23% this year, which was 15% last year. And even PAT has gone up by close to 700%. With 7 crores last year, it is about 58 crores this year. So I think overall there's a momentum of people, coming back to the cinemas, wanting to watch movies, getting entertained, and which comes very naturally to most of the Indian consumers.
Ajay, 23% margins, are they sustainable, or is it just a fabulous quarter?
Well, if you look at the lineup and some of the things that we have done, it looks like the next 2 quarters are also looking very good. The lineup is very good, and as I said, the way we have made our circuit in certain locations. We've been controlling our costs, both on rental terms, all operating expenditures. I think the next 2 quarters at least are looking very good.
All right, Ajay, also I didn't get one particular number. I've got your average ticket price, but what about the spending per head? What does that number come in at? And on a year-on-year basis, could you give us a comparison as well?
Spend per head on F&B was about 64 rupees last year. That's gone up to 75 rupees.
75, all right.
Yeah.
Ajay, I just want to talk about sort of broader business plans for the remainder of this year as well. There's a lot that's been happening. You've acquired the DD Cinemas from the DLF group, and I believe you've also got shareholder approval for a private equity placement. Just in terms of fresh money raising, fresh spending and investing in the business, what lies ahead in the coming months?
Well, DT acquisition, I mean, these numbers don't reflect the DT acquisition.
That's right.
That's going to happen after we get our CCI approval. But we had already decided to raise the money for the acquisition. So that happened today by the board. It got approved. But other than that, the way the year is looking, all the accruals that we will get will take care of our organic growth. So even if we don't add DT, we're looking at adding about 72 screens this year. And the good thing is that most of the screens are happening in the southern region, in Chennai, Mysore, Bangalore, which is where the movie going consumption is also very high. So even if we don't add DT, about 530 or 540 odd screens is what we will end up with by the end of this financial year.
So in terms of fundraising requirement, where does that leave you for the DT deal separately? Of course, that's an ongoing process, and even otherwise for your organic expansion, are you looking at raising any more capital this year?
No, there's no need, because the accruals are good enough. We're adding about 70 screens, and that is something that gets taken care of with our cash flow accruals every year.
All right, Ajay, one final question before we let you go. I was taking note of that point. You said we didn't have any big blockbuster film release, and these are the numbers we get. Now, I'm guessing the second quarter we have a couple of blockbuster releases. So how good are these numbers going to get in the second quarter? And could you give us some guidance for the financial year as well?
I think second quarter is looking very good. It started off with Bahubali, which is not supposed to be an all-India blockbuster, more a regional blockbuster, but the dubbed version also has done very well. Then we've had Salman's movie, and we've had record occupancies. Then we're getting another movie called Brothers. So lots of movies coming this year, this quarter as well. So the way things are going, this quarter is looking pretty similar to the first quarter. Even third quarter, we got some blockbuster movies of Sanjay Leela Bhansali, Shah Rukh Khan.
Right.
So I think first 3 quarters are looking pretty similar.
Right.
Fourth always takes a dip because of exams and IPL.
All right, Ajay, give us some guidance, give us some numbers for this financial year. What's the growth going to be?
Numbers are difficult to give. 20-25%. What's going to happen in the first quarter?
For the financial year?
I mean, this year itself, the first quarter itself has gone up by 25%.
Correct.
So one can do some extrapolation, but as I said, fourth quarter is always very unpredictable.
All right, Ajay, we'll leave it on that note. Thanks for joining in. Good luck with those business plans. On that note, let's take a quick break. We'll answer some more stock and personal finance queries when we come back.
CNBC TV 18, celebrating 15 years of leadership.
Consolidation in the FM radio space. Just getting news that ENIL will be buying 4 radio stations from TV Today. They've already announced that. They're getting approvals from the INB ministry now. Moving on, CNBC TV 18's Rituparna Bhuyan caught up with Rajiv Chandrasekharan and began by asking him whether the GST bill timelines will not be followed as the Rajya Sabha has been adjourned.
If the GST bill is not passed in this session of Parliament, it is fatal and it will completely put at risk the April 2016 deadline. And April 2016 deadline represents 10 years of hard consensus building and decision making on parts of state governments and the central government. It is not a good idea at all for the session to not pass this GST bill and therefore for the April 2016 deadline to be missed. We cannot afford that as a nation, and it will be almost a complete waste of the last 10 years of work.
What about the regional parties? It seems they are on board, including AIDMK?
No, I think there is really no opposition to GST bill. I think what is happening today is a playing out of some other politics and therefore disruption of the parliament. The GST bill, there may be some elements within the parliament that believe in a purer form of GST, including on the issues of 1% tax. But on the core GST proposition, I do not believe that there is any opposition and there is real widespread political consensus between state governments and the union government.
The last question, sir, what about the GST rate itself? Of course, the GST Council will take a final call on that, but what kind of discussions happened? Because we understand that some parties wanted it to be at around 20% or around that rate.
I think let's be reasonable and practical. I don't think there is a government today, whether it's in the state or the center, that wants a high rate of GST, because high rates of GST means more evasion. Lower, more reasonable rates means much more expansion of the tax base. It will be a reasonable base. It will be a thought through, discussed base number between the states and the union government. I don't think people should worry too much about the number, because it is in the interest of all governments to keep the rate reasonable.
What is a reasonable rate then?
In my opinion, any rate which is around 15% plus or minus 2 to 3%, in my opinion, is a reasonable rate.
All right, then some interesting comments coming in there. The market's still at the high point of the day, so things are looking good, but we didn't get time to answer a lot of your queries. But thanks so much, Mayuresh. Thanks, Harshvardhan. Maybe the next show, in fact, we'll try to catch up on those queries. Thanks so much for joining in. That's all the time we do have on the show. Do remember to keep sending your stock queries by posting it on Money Control message board. Stay tuned. Closing bell comes up next.
CNBC TV 18, celebrating 15 years of leadership.